Tejas, let me start with you. We've seen, Alphabet get hit for its capex spending, but they also said the problem was they just didn't have enough capacity. That's why they missed on cloud. How do you see capex spending when it comes to building up AI infrastructure going forward, especially after we saw Alphabet actually get dinged for that?
Right, I think the market is being a little short-sighted here in treating Magnificent Seven a little unfairly based off of these results. But the reality is that we have a massive generational trend that is unfolding in front of us, and it is going to unfold on a prolonged timeline. I think the risk of not spending is higher. And just like you said, you hear from Alphabet and many of the other CEOs as well that the demand for AI services is incredibly strong. So you're seeing these businesses clearly have these existing franchises that can absorb a lot of this demand, and that is closing the ROI loop. But beyond that, we think there is plenty of healthy demand from the broader enterprise that hasn't even come out there to really try out these AI services yet, right? So really a robust story here, and I think investors should continue to get exposure to the AI trade. But you may want to start thinking about moving beyond stocks like NVIDIA again to position towards the inferencing story and maybe even look at software.
So, Tejas, I just want to be clear. Are you saying that the chip trade, it's cooling off right now and you should move into some other areas, or is there still opportunities in that chip trade with the continued capex spending?
I think, Frank, there is plenty of opportunity with the chip trade in 2025, but you have to take the backdrop into consideration. I think we've had this trade work incredibly well, specifically with stocks like NVIDIA over the past 24 months. I think it is a good time for investors to step back and say, where maybe the needle, where is the needle shifting from here on out, and how do we position for that? And I think alongside companies like NVIDIA, you will see demand for AI inference infrastructure emerge, which is companies like Broadcom, for example, that provide networking, custom silicon. There's many others within the memory storage value chain. But even further out, I think it could be a good idea, again, to move up the stack and think about software-focused infrastructure, think about cloud applications that will ultimately, again, deliver a lot of the value associated with the AI trade.
All right, Phil, great to have you here as well. Investors and companies not only talking about capex, they're also talking about currency impacts. Apple and Microsoft citing the stronger dollar as a headwind. Where do you see the dollar going from here? We got just a few days ago pretty close to parity with the euro. Where's the next moves for the dollar based on what you're seeing?
Yeah, we're seeing a big snapback in the dollar overnight. I mean, key commodities like food costs, oil, and materials, we're seeing oil up about 1%. They really impact and drive inflation, which drives growth, monetary policy, and finally the currencies. The strong U.S. currency, it makes it more expensive for these multinational companies to convert those foreign profits into dollars while hurting the competitiveness of exporter products. So the rule of thumb, Frank, you should know that every 10% year-over-year rise in the dollar shaves about 3% off S&P earnings. So, information technology, materials, communication services, most of those have currency risk with 40% of their revenue coming from overseas and outside the U.S. So Caterpillar, NVIDIA, Micron, Amazon, half of their sales come from overseas. And those are four names that we own in our wealth management side.
Phil and I, you and I actually spoke, I think a couple months ago, just about the stronger dollar and what it could mean for earnings. We have actually seen that play out. Another area we're seeing the dollar gain is against the yen. We talked a lot about that yen carry trade not that long ago. When you and I spoke, you said a lot of times that yen carry trade's used to buy the NASDAQ 100 and other tech stocks. If we continue to see the dollar gain against the yen, how does that impact the tech trade?
It definitely impacts it because of the fact you might see some unwinding of it. I mean, historically, what people will do is they'll take the weaker yen, they'll borrow against it here, convert that to dollars, and they'll go out and buy tech stocks. So we'll see how this plays out. I think a lot of those types of traders that play that carry trade are on the sidelines right now, waiting to see what President Donald Trump's impact on the tariffs with results with Asia and see if that'll play any kind of role on it going forward. He's taking a softer stance against China at the moment here, but we could see if that broadens out if he doesn't get what he wants.
Tejas, we got to talk a little bit about DeepSeek and that impact going forward. So you mentioned you might want to move higher up the stack. What about data center plays and other things like that? Has that story and that narrative, has that changed considerably? What also about energy? We saw energy under a lot of pressure following the DeepSeek news. Has that part of the narrative changed as well?
I think the DeepSeek news is a net positive for the AI infrastructure story. It clearly, I think, drives an explosion in use cases because now you can experiment at the algorithmic layer, you can experiment at the application layer, and at the end of the day, I think it really takes demand for formalized AI infrastructure for data centers significantly up, and really opens the market for mass market adoption. So, I think it is an interesting time here. Again, if you take a step back, the hundreds of billions of dollars that hyperscalers have committed to AI capex are yet to be spent. And naturally, I think the chip ecosystem as well as the data center ecosystem benefits from that. And broader adoption is also likely to, I think, move the needle away from data centers towards things like AI devices, right? And we've just had a phenomenal quarter from companies like Qualcomm, for example, that are showing significant traction in that market as well. And I would encourage investors to focus on that too.